All right, good morning, everybody. We're going to get started here, looks like in about 4 minutes. So hang tight. We'll be right back with you. All right, we'll get started in about a minute. All right. Well, welcome everybody to Stock Analysis Friday. My name is Bennett McDowell with TradersCoach.com. It is great to be here with you all this morning, and I hope everybody's having a happy Friday out there. All right. So market's selling off this week. It has been for quite some time. As you know, I'm going to show you a chart of the Dow before we actually get going. When we've been doing pretty much for now, predicting this about a year and a half, I would say. So it's finally coming to fruition. We're in a big move down. We think the bottom will be somewhere around 18,000 to 15,000, probably by the end of next year. So we're kind of now in a downtrend, no longer an uptrend like we've been used to for so many years. So just be aware of that and take whatever precautions you need to take. And I just suggest raise as much cash as you can, because when we finally get to that bottom, of course, there'll be tremendous bargains. If you're more of an active trader, you can take advantage of the sell off in a variety of different ways. All right, well, let's get going. Of course, this is a webinar where I'll be looking up stocks and ETFs for you. So whatever you want me to look up, type them in caps. And let's go ahead and get going here. All right, a couple things I've got to do, of course, are the administrational items. And the first thing I have to, of course, is go over the risk involved in trading. Like I always say, without that risk, there is no opportunity. So the two really go hand in hand. But you need to plan for that risk. And the best way to do that, of course, is do risk control on each and every trade, and only trade with risk capital. Very important. If you need help with the risk control part of it, okay, I've got some great books I'll show you in just a minute that can help you with that. All right, in terms of actually taking any trades here, we want you to check with your financial advisor, accountant, or attorney, whoever manages your money, to be sure what we suggest here and go over are suitable for you. Not all trades are suitable for everybody, and it depends on your personal situation. And of course, that's where your financial advisor can advise you on that. So let's go ahead and jump in here. A couple books here I would recommend. If you need help with risk control, I just came out with a brand new book called Money Management for Traders. It's a concise book. It's one where we give you the formulas of what you need to calculate your trade size or your position size. And so you definitely want to have that built into your trading plan. So if you need help with that, that's a book for you. It's very inexpensive, available on a variety of formats. If you want a deeper dive, book on the far left called A Trader's Money Management System is an excellent book. It's a much deeper dive into risk control, talks about the risk of ruin tables and things like that. And then also the Art of Trading book. This is a great book for those not only using our software, but beginning out in trading. We're coming out with a second edition that should be out in the spring of next year. And so that's something we're working on right now. And then the Survival Guide for Traders is a reference manual for those that trade out of their homes actively. So it's a really good book, kind of makes you trade your business like a hedge fund, so to speak. And then my other book is the Elliott Wave Technique Simplified, which I use quite a bit. You'll probably see me use that as well today. So definitely I use all those tools. All right, we have a variety of software tools. If you're interested in any of these, go to our website. We have charting software tools that we use for entries, exits. We have scanners to find markets we like to trade. And then, of course, we have risk control. You cannot have a trading system without great risk control. So those are all available too. All right, so here's the chart I wanted to go over with you. The last time we updated this was earlier in September. And basically, it hasn't really changed much over the last year. But the market has finally broken at the end of last year, early this year. So this, in terms of an Elliott wave analysis, excuse me, this is an Elliott wave 3. And now we're going into an Elliott wave 4. Now, this is a weekly chart. So every price bar here represents a full trading week. So this is not the daily chart that many people are used to looking at. This is a longer term chart. And so when we look at this, we can see we're going into a significant long-term correction. And eventually the target zone, which is a Fibonacci retracement zone, is literally between 23,273 all the way down to 15,014. And that's roughly a 38.2 to 61.8% retracement, which is a normal retracement, even though those numbers sound so low. This is a normal retracement for the kind of bull market that we have had. So there's nothing unusual about this. The only additional thing I can add to that is we have a great indicator here called the PTF. And as long as that remains red, it's indicating that in the lowest price of that red area, which was the COVID low on this chart, then there's a 75% probability we're going below that. So during this correction, we expect to get down below 18,000. Now, the COVID low was 18,213.60. So that's why we're saying probably a bottom on this correction between 18,000 and 15,000. So you want to have some cash available when you get down here, because you're going to be able to pick up some great bargains on most all stocks at that point. You know, usually when you get to a bottom, nobody wants to have anything to do with stocks, and that'll be the case here. So pretty much everybody will be fed up. But, after wave 4, which is what this is in terms of an Elliott wave correction, then you have a bullish wave 5, and you will actually go above the old wave 3. Probably not going to happen for about 4 years. All right. So this is going to be kind of a long-term situation. But what I want you to take away from this today is that this correction here is long-term. We are now in a downtrend, so no longer an uptrend, and it looks like we're in C wave. So usually when that happens, all the bad news out there is accentuated and the good news is somewhat ignored. So you will have a trend to the downside. Doesn't mean you're not going to have powerful days to the upside, because you will have that, but they shouldn't take out previous major highs. So once again, we don't think we're going to get up to the highs that we had at the end of last year, early this year, probably for another 4 years. And I think probably we'll get down to this target zone here, probably about a year from now. Okay, so that's kind of where we're at there. So, prepare for that as best you can. All right, and finally, we want you to like, subscribe, and share. Okay, please give your friends a link here. The idea here is the more people we can get to come here, the more stocks we can look up, of course, and that's better for everybody, because we can usually walk away with a few for everybody to trade each and every Friday. So it's really kind of cool. All right, so I want to thank everybody for attending. Our attendees seem to be some of the brightest people, I think, that trade the markets, and it's great to have you here. So welcome, welcome. All right, so let me come out of here and get to the charts here. Couple quick things on my layout here. Here are my scanners way up here. Okay, when we look up charts for today, we probably won't use that much. And here's the actual layout of the charts below that. Now, these little triangles, these indicators are all our software tools. So you can get those at traderscoach.com and check them out. But basically what we do is we have 3 charts of the same market. So this is the 60-minute chart over here. This is the daily chart here. And then this is the weekly chart. And so we're taking a look at the long-term aspect of the market we're looking at, the intermediate, and then the short term. Okay, so that's kind of how we break that down. Also, too, at the end, we'll probably take a look at the E-mini and some of the futures markets, and finish up with maybe a little day trading on those. All right, so let me go to the comments here and let's get started. All right, let me take a look here and see what's coming in here. All right, first one is from Adam, and that's IBKR. And thank you, Adam, for typing those in caps. Definitely a big help for me to see those good. All right, so Adam, not sure what you're doing with this, but let's take a look here. All right, so we're kind of in an area here, pretty messy chart, even on the weekly chart. Check that out. So we kind of have a lot of volatility, a lot of movement all over the place, right? So, what do you do with this? Where is your target? I've seen better stocks to trade. So if I was looking at this, I probably would not touch this stock at this time. But I think probably it's heading down like the rest of the market. So I would think something like this was probably an A wave down, B wave top, probably starting to enter a C. So I think if anything, I would probably want to be somewhat short this with a stop above here. All right, so that's kind of where I would go with that. And the target would be below A wave and then some. So we're probably looking at a wave 4 correction on this one as well. So I think probably, if you want to go short on that, you could. But I think there's some cleaner stocks than that. But I would not be long on this right now. Okay, that's IBKR. All right, let's take a look at BABA. Frank, how are you? Okay, so Frank says he went long yesterday. It's a short-term trade. All right, let's take a look and see. And let me just coordinate these indicators. Okay, so I think it's a little early to go long. All right, I would not have gone quite long yet unless possibly you're thinking of the 60-minute chart. But the problem is that, here you have a red owl, and this concerns me. So this could stay red for quite some time, but it's basically saying also that we're probably eventually going lower. So you may get a pull up here, I would wait and go long green if you're going to trade this very short-term trade. I think about the most you're going to get out of this is maybe 90 bucks, possibly. Okay, and you're at 81.44. But I think you jumped the gun on this one. Okay, I would have waited a little bit longer. May work out for you on the 60-minute chart, but you definitely don't want to hold this for a long-term trade at this point. All right, you're kind of going against the daily and you're going against the weekly. Doesn't mean you won't get a rebound that could work in your way, and that's what the 60-minute chart is kind of indicating. But again, you still have a red owl there. So jumping the gun, I think, Frank, a little bit on that. All right, let's keep going here. Okay, Key, how are you, Key? MAR. All right, let me ask a question. I have my cam to the left of the charts. Is that a good format, or would you rather have it the way I usually have it at the bottom left-hand portion of the chart? Let me know in the comments, and I'll change it if you want me to. All right, so here's MAR. Okay, and you're short on both of these, and that looks like a really good thing to be short on. So a couple of things here. If you're already short, you got the PTFs all in your way. Now, what are they telling us? Well, they're telling us with a 75% accuracy, and this indicator, again, is available at traderscoach.com, that we're going down beyond these lows here. Okay, so that's what it's saying. Now, we have a little bit of a green owl appearing here. So I imagine you've been short when this was red here. And the stop is way up here. So you that will allow you to have any type of small retracement before it heads back down. So you just need to hold this and don't keep your stop too close. Okay, we're looking at a stop above here around 157 on this. Okay, so just stay short and you should be rewarded for that. All right, ITW, let's take a look at that one here. And you're short on this one as well. All right, so my only concern here is the green PTF on the daily chart. So I don't know how long you've been short, but you've got a couple places to put a stop. One on this pyramid here, and also when this goes green. So you got bullish divergence building here. So I'm a little bit skeptical on holding this short too long here, okay? I actually like the other one better for a short trade. So have your stops in place in case this thing reverses and goes high. Eventually, you'll get another chance for a short on this because the long-term charts are short. So if this turns abruptly red, then you can just keep the short. But with that, green for right now, a little concerned with that. You might want to take profits and wait to see what unfolds with that. All right, let's take a look at PRTA. And this one is for Alexander. Hello, Alexander. All right, so give that one a second to load. Let me type that one in again. Okay. Well, Alexander, hopefully you were long earlier, especially on that pyramid way back in here, right? Okay, great one to get off the bottom. Keep the stop even here. All right, so I'm liking this. I think we're going up to probably new highs on this particular stock. You know, here's a great example, unless it had a stock split or something. But here is a great example of some stocks move independently of the overall market. Okay, so you always try to find those when you can. So basically more highs coming. Okay, more highs coming on this. The problem with getting in now is where do you put your stop? Now there's a gap here. Okay, no gap on the weekly, but the only place to put your stop is way the hell down here. I mean, that's 33 points away. So at this particular point, probably would have to wait for some type of pullback. Maybe you'll fill this gap, pull it back, and then look for a reversal again, and then put your stop under that pullback. So I think, unless you got in it early, I think you got to wait at this point. It's just too risky for a big pullback. All right, let's take a look at BIIB. All right, while that's loading, let me just see here. Okay, so Frank is saying charts are small, go back to the way it was before. So you like that better. How's that? All right, we'll try that. If that's better, we'll just leave it there. Okay. So BIIB. All right, let's take a look at this one. And this one here, we looked at this last week and we had a retracement area somewhere up in here. All right, so we've hit that already. Okay, and going higher for sure right now, going higher. So if you're long, I'd stay with this. Okay, if you're not long yet, again, you got to wait for a pullback. All right, let's keep going here. ABNB. All right, so let's take a look at this one here. So we only got history on the weekly chart back to 2001. So not so much history on that to help us. The only thing here that it looks like here is looks like we're heading down for one more leg to the downside. We've got a red PTF here. So this could be a 3, 4, and then we'll see if this bottom is taken out here. So I think probably a short trade if you're short already. I mean, you had the pyramid trading point entry back up in here on the 60. So that could have been a short trade, and we'll draw some fib extensions in here to see. That's the time extensions. So let's draw some fib extensions as well and put that in here. So we're looking at a low of probably 73 to 89. 73.89 down to 43.99. So somewhere in that is the target, and that would pretty much align itself with the next big move down. Okay. So that's kind of where I'm at on that. So that's ABNB. All right, let's keep going here. All right, one I want to take a look at, I don't want to miss this one. I'm going to take a look at a couple like cryptos. I want to take a look at the ETF GBTC. Now, there's a lot of negative news out there on cryptos, of course, recently, especially since it went from 60 down to 11 bucks. All right, but it's still a possibility here for a bullish trade because we're getting close, I think, to a bottom. So I don't want to miss this. So I'm going to just take a look at this, and I'm going to zero in on the current price activity here. So we still have active pyramids, bearish ones. They have not been stopped out. All right, this is green, indicating that this last move up to 14 bucks created a green PTF on the 60. So we may be now moving up. I would take a long trade on this when this turns green. And this has to be green on the lower time frame. This can be yellow or green. We have yellow here, and we no longer have red here. So I would take a long trade with risk control so you don't lose your shirt and put my stop at the very, very bottom at that point. So crypto is not quite ready yet, but let's keep looking at it every week because it could be a possibility, all right, at some point, okay? So let's keep an eye on that. All right, now, the other thing I wanted to look at was silver. Silver is another one that a lot of people are saying, buy, buy, buy. Right now, we haven't really got a good buy signal yet because we have a red PTF on the daily chart, which is that chart in the center. So that's indicating that if we get any type of movement to the upside, it's only going to be temporary. So we do expect a fib retracement movement maybe to 19 to 21 bucks, but then it should falter again if this remains red. So that's the 60-minute chart is showing us we're in that correction now, so we should get up to that, but it's not a buy and hold situation yet. So if you're looking to buy silver ETF at this point to offset the market, I'd wait a little bit. Okay, just wait. Same thing, I think, with gold, too. Gold is another one of these that most people go into during times of market decay. So again, we have a red PTF on the 60-minute. So this movement up is not going to last according to this indicator. Now, if this turns green, and it could, all right, in other words, if the momentum increases dramatically to turn that green, then we may be at a bottom. All right, this has to turn green as well. We still got an active pyramid with a stop here on this downtrend. So at this particular point, not quite yet. This is green over here, indicating after this move down is done, we should have a big move to the upside. So you do want to be long eventually. It's just the shorter time frames are telling us to stay short at this particular point. Okay. All right. So let's see what we got. Yes, to answer your question on the Forex, we actually have a lot of traders worldwide. I think our software is now 85 countries worldwide is using our software. We have hedge funds using it. We have people trading Forex. We day trade the futures as well. Many people do that, bonds. Yeah, so basically, as long as you can get the data into one of our compatible charting platforms, which would be NinjaTrader, which is what's in front of you now, TradeStation, multi-charts, MT4, MT5 are all compatible charting platforms with our software. So it all depends on you being able to get the data you need into those charting platforms to trade the markets you want to trade. All right, great. Let's keep going here. And, you know, we also did a webinar on symmetry, fractal symmetry in the market. Any trading system that is designed off technical analysis and price patterns specifically, all right, can be traded on any time frame in any market. And the reason why is if I move the price and the date axis on any one of these charts, you would have no idea what market I'm trading. You know, if I remove the name of the stock from the chart, you would have no idea. All right. And that's because we see repetitive, similar price patterns throughout markets in general. So that's why if a software is designed around price patterns and the truths of the market, which are momentum, volume, and things of that nature, they can be used on any time frame, any markets. All right. Cool. All right. Let's see. Yes, MT5 as well. All right, Adam. All right, DXCM. DXCM. Okay, so it looks like, you know, we hit a bottom here. Okay, we've kind of waffled lately, haven't we, on this? Kind of going sideways a little bit. We've got a green PTF on the longer term charts. We still got a red owl here, green here. So possibly a long trade's coming up, but you got to wait for this owl to turn green, okay? So basically, any long trade you take, as long as this bottom holds, that's where your stop needs to be. Because that's why you're taking the trade, to try to pick a bottom. A lot of times when you pick a bottom, all right, if you put that stop at the bottom, you'll survive the volatility before it starts to move. And if you don't, then you want to get out because you didn't pick the bottom, right? So that's kind of the deal with that. All right, Dan, how are you? Okay, MCD. Yes, this is one that we love to the short side. This is one on our market opportunity subscription service. By the way, if you like this type of analysis, we have a whole subscription service called More on that. And if you go to our website, you can find that. I'll probably put the links up there in the recording. But this is what we do. We find stocks based on multiple time frame analysis with our tools, and also update the overall market forecast. So we've got a pretty good following there, and that is available if you want a more in-depth dive on this stuff. All right, so McDonald's, no reason not to stay short, right? Okay, we suggested a short trade actually here quite a while ago, and we had a pyramid trading point entry. Stop is still here. All right, now you got some options here. If any of these indicators down here turn yellow, you can always scale out of some, or you can use a pyramid on a lower time frame to scale out. And what scale out means is that you want to keep your position whole for the most part as long as you can. but there are times when the market gives you certain gifts before it goes into a significant rebound. And you may want to take some profits off the table before it gets to that rebound. So these indicators below here, especially on the shorter time frame here, are great to use to help you time that rebound. Doesn't mean you have to. You can keep your stop here. But if you want to lock in a little profit, or you see another trading opportunity and you need some money for that, this type of scaling out allows you to free up some money so you can put it into something else if you need to. But in any case, no reason not to stay short on this one, right? I mean, if you look at the target range on the daily, okay, we haven't reached that. That's way down here because that's the lowest low in the red area. And check out the weekly chart. I mean, look at this one. All right. So that's showing even lower. So we actually have this as two separate trades. This is a more short-term active trade. This would be a long-term trade. The reason being is the target down here is like 130 and some change, right? And the target here is like 217. So this is a long hold. This is a much shorter hold. All right, so you can decide how you want to do that. You might even want to make it two separate trades. Okay, so keep an eye on that one. Good one to stay short. I don't think I would cover it. Okay, so the next one is KMX. Now let's see how that one's doing. All right, so this is a short trade too. All right, fell out of bed recently. And again, I don't think I would do anything to cover this yet. Now, again, very similar situation. You got red here, red here, red here, red here. Yellow's okay. You can go long or short on a yellow PTF, but this is very strong. I would hold this. If this turns yellow, you could scale out if you wanted to, because we're definitely getting towards the mature part of the trend. So look at the bullish divergence. Okay, so at this particular point, probably a little too late to go short, but if you are short already, all right, you're in good shape. Okay, now it's just managing the short trade. All right, so let's see what else we got here. All right, let's go. I think we looked at McDonald's already. Did I miss anybody? Okay, how are we doing with that? Okay, I think we're pretty good on that one. Okay, so anybody else? Everybody doing okay in the markets these days? Oh, let's take a look at the SQQQ. This is one. This is an inverse ETF. It's 3 times. All right, and basically, in an inverse ETF, and this is an inverse on the Nasdaq, but they're inverse ETFs just about on any index out there, and they're very handy. Okay, because they're easy to trade. They're liquid. And so this will go up if the market goes down, if the Nasdaq goes down. So in a case like this, it is basically showing a long trade at this point. And this actually, if we think the markets are going down to that 18,000 level, possibly to 15, it's going to affect not only the Dow but the Nasdaq as well. And this should do really well. So this is not a bad hedge to use, or actually an active trade to take advantage of the sell-off. So you may want to consider this and some of the other ETFs out there. All right, let's see. No, we're going to keep it to stocks. No Forex today. Let's see what we got. TGT. Let's take a look at that. All right, give that a second to load here. All right, so Frank, I don't know what you're doing on this one, but you've got a green PTF on the daily. Looks like, the pattern looks like it could possibly go down a little bit, but I'm not really that thrilled on this, so I would probably pass on this one. Okay. take a look at the SDOW here and see what that one's looking like here. So this is an inverse, of course, on the Dow. So you got the SQQQ, which is inverse on the Nasdaq, and then the Dow is an inverse as the SD, and it's the same type of thing here. Okay, so this would be, if you are going to have the fortitude to hold this for a year, you should be pretty happy, I would think. All right, so I think if the market gets down to those levels, this thing will go up quite a bit. And again, it's another great way you can hedge your account. But for most people out there that are not active traders, probably the best recommendation I could give you is probably get with your financial advisor and maybe raise some cash. And how you raise that cash will be up to you. All right, if you need maybe to sell some of your profits on some of your stocks, you can do that. You may have tax implications with that, of course, but you can talk to them about that. But if we get down to those levels, all right, there's two things. One is that's going to be much further down. You'll be glad you sold out of those. And the tax situation, okay, you'll have that beat because the sell-off is going to be much larger than any tax you would pay on that. And the second thing is that when you get down to the bottom, you can then go back into the market on some of those at a bargain prices. But you have to have the cash available to do that. So for most people, that would be a better game plan. But if you also want to more trade to the short side, then one of these ETFs might be good as well. But check with your financial advisor. I don't know your personal situation. And of course, they do. So always good to check with them on that. All right. So let's take BMY here. Okay, so we were looking at a target on this one here for a bottom here, and it hit it, but the PTF is red. So basically, it's not done coming down. So this is coming down a lot further. All right, short term going up. All right, we're still moving up, but it should be temporary, and we should probably get above 76. So right around this number here, and then it should sell off. Okay. Now we want to watch this. If this turns green, okay, then that changes things. But that's kind of what that's saying right now. So that is BMY. So Adam, I don't think I would take a long trade on it right now. I kind of would hang tight on this. I think there's better opportunities. And even though this is basically saying it'll probably get to 76. All right, you'd have to put your stop fairly close in order to have a 2-to-1 risk to reward. And stop that close, you may get stopped out on. But after it hits here, then we expect it to sell off. So that's the only thing with that one. Maybe a short, maybe an option, deep in the money option where you get the delta is close to 1-to-1 for a short-term trade might be okay. But that's about it. All right. Going once, going twice. Let me see if let me just see if I have data for the Forex. If I do, which one you want? You want, I don't think I have the Australian one, AXU. No. Let me see if I got Euro USD, see if that comes up. Yep, no historical data, but that's what it looks like on the daily chart. So I've got end-of-day data on this. I don't have intraday. All right, so that's kind of how it works there. So in a case like this on the euro, we're still heading down. Great trade based on the pyramids here. It could have gone short here. This stop would have held and trailed your stops right down. Nice long trade right there. Okay, it's still red over here, so it's going lower. Okay. All right, Costco. Let's do Costco for Frank, okay? That's why I don't do the Forex data at Forex, because I don't have the data for the intradays on that. And there's not that much demand on it. For a lot of people out there don't ask for Forex markets that much. Okay, so this one, let's see. Okay, so Costco, you want to be short. I'm reading Frank's note here. Okay, so in any case here, the target on this, Frank, is way down here on this one. And I would just stay short. Okay, stay short. Now, Frank brings up a good comment here about brokers. You know, for the most part, you've got to remember that what brokers like to do in a bull market is when they get a pullback, they like to call their clients. It's an opportunity for them to have them buy more stock. You know, it's a good story. Brokers love good stories. They don't like charts. Brokers hate charts, but they love good stories. So they love to talk about management. They like to talk about their analysis group at their companies, have done a complete analysis. They love to have a story. And their famous story is whenever a market pulls back, this is a tremendous opportunity for you to participate in this lovely stock again. So they call people then. And it works great as long as it's a bull market. But in a bear market, it doesn't work anymore. And back in the year 2000, technology, you know, they were pounding the table to buy technology. And I was with Morgan Stanley back then as well. And every pullback, they wanted to put more and more people in technology. Well, of course, that ended up in a disaster because every time when the market finally broke in 2000, technology sank, people lost lots and lots of money. And they actually had too much money in the market for the most part. So my point here is that if the broker calls you, check the charts. All right. See if you're in a downtrend. See if it is a good time to buy. Sometimes it might be, but other times it might not. But with you being able to check the charts, you'll be able to be one step ahead of them. Okay. All right. So Costco, stay short. All right. AMD, let's check out that. Possible short, Dan says, on AMD. All right. So AMD actually, Dan, has been a short for a long time. Okay. So what I'm concerned about here is we may be getting close to the bottom. So let's just see what we got cooking here. So we got a red PTF, so we're still going down. I'm going to remove, in other words, we went up to the fib retracement area. Let's draw a fib extension on this one. If I can get it down there. Okay, so we're looking at a target of around 56 down to 27. We're almost there. So I don't want to recommend this to you because if you look at the weekly chart, when we get down to this target, which we're already there, okay, in the weekly, that we should get a big rebound back to the upside, okay? So on AMD, I think a little more movement down. We've got red PTFs and red owls on the 60 and the daily, and we've had them, you know, the pyramids have been, of course, red for quite a long time. So I would not recommend this. You don't have a risk to reward of 2-to-1 anymore, really, into the conservative part of the target zone. Now, if you're still short, you're great. Okay, stay short. And keep your, now you can now trail your stops on the closest pyramids you want. Okay, but don't take a short now. It's a little too late. It's going to probably reverse on you, unfortunately. All right, I'm getting ready to go over and take a look at the futures markets. All right, I can put it on the day trading time frames. You want me to do that? Does anybody have any last stocks? I'll keep it here for just a momento. Yeah, that would be a better play, Dan. Wait and go long after it bottoms. All right, let's see. Okay, coin, Alexander, COIN. Let's take a look at coin here. All right, so coin looks like it's due for some type of rebound here. But now I'm concerned because it looks like we have too much red on all the time frames for the PTF. Okay, so red here indicates we're going a little bit below 60. The bottom is below 50. So that bottom still could hold, but I definitely, would not go long here. So here's kind of what we were thinking, that it would head up here, a 3, a 4, and then a 5 in terms of the Elliott wave. All right. However, if we look at the weekly chart, it could go straight down from here without much of a rebound and still be a 3. Okay, and this would be a minor 4 and then a 5 to make up the end of 3. So this is kind of a tricky little one. So if you're going to go into this one at all, wait until the PTF is no longer red nor the owl on the 60-minute chart. Then you don't want to go long until the owl is green here. The red PTF actually can remain red during an entire wave 4 correction. So it could go up here and then go down. So that's a possibility. But for right now, I don't think I would go long on this at all. And if anything, maybe a short trade and put this stop up as high as you can. But you got to make sure you have that 2-to-1 risk to reward. Okay, so that's kind of my thoughts on that. Okay, that's a little bit of a tricky one. All right, let's see what else we got cooking here. All right, I'll give you guys another 30 seconds or so, and then why don't we take a look at the MES and see what that's doing today in a couple of the futures markets. All right, we'll run over there. All right, so now I've got the day trading platform up, and it looks very similar to what we looked at before. The only difference is we're on the 1-minute time frame, the 15-second, and the 5-minute. So that's our long-term time frame, 5 minutes. And this is what we do in the day trading room. And basically, indicators are all read the same way. So in a case like this on the MES, it looks like it's going down further. All right, we had a lot of pyramids on the short-term time frame way up here to go short. So what I would do if I was trading this, I would, if I just showed up like we did now, let's see if we get a rebound, and then we can go short again. That's kind of the way I would look at that. So if we drew some type of just simple retracements in here, okay, I don't think it may go straight down from here and not give us a rebound yet, but I don't think I would enter until we get the rebound. And so if it makes another low, which it looks like it's going to here, I would just keep moving that fib retracement down until we get to the bottom of this move down. In my opinion, it's too late to join this. I'd rather wait for a rebound and then take a look at it then. Okay, because the trade really should have been entered a while back. Okay, so that's that. Let's take a look at the Nasdaq. You'll probably see a very similar picture because it's an equity, same type of thing. Okay, so look at the pyramids on the 15-second chart. Beautiful job on that. Got one in here. So basically, you'd want to stay short. If you were short, let's take a look at crude oil. Crude is a great one to trade too. Okay, so crude is moving up here. We just got a green PTF. I would not be long on this trade though. Okay, too many red PTFs at this point. Let's take a look at gold. Okay, gold has a channel going on here. You can see an up pyramid in blue and a down pyramid. That's the bracket of the channel. And at this particular point, probably no longer any green PTFs. We're probably going to pull back at some point here. So for this particular market, maybe, okay, a quick short trade at some point if we get a pullback. Let me just draw the retracements in. The only thing with this is that you might not have the risk to reward. You might be better off to wait for the pullback and then go long. All right, so that's kind of the breakdown there. Here's the Dow, but that's going to follow the stocks. And here's the Russell. And that's breaking down as well. Let me just remove these from previous day trading session. Okay, so let's go back to the MES. All right, it made a little bit more of a low here. Let's move that down here like that. And see if we get that rebound. If we get the rebound up into here, May, and that if we get the rebound into this area and this remains red, then that's a good thing. That opens it up for another short trade. Okay, so actually when you trade the 1 minute time frame the way we trade it, it's actually not as fast as you think, because we have to wait for the right alignments before entering. And then before we enter, you have to use calculate your trade size using the risk to reward calculator. So it's a combination of the trade size along with where the target zone is you're estimating, and is the risk to reward worth the trade. So we do that on every trade we take. All right, so this would be kind of a wait and see type of game unless you're already short. If you're already short, hey, it's been a great ride. But if you're just showing up now, a little too late to get short, you kind of want to wait for that rebound. All right, so I'll leave it here. I'll put a little music on, and the game plan is I'll come on if I see anything worth doing. Otherwise, you can just hang out and watch. And I want to thank everybody for being here today. Great session as always. Dan, thank you. You have a great weekend as well, okay? And we'll be back on Friday. Good. So you're going to be in the futures room on Tuesday? Excellent. We've been kicking butt there, Dan, so good. Be good to have you back. All right, Terry's asking, what if the PTF goes yellow, then what? Well, if the PTF goes yellow at this point, then we probably would not trade it, okay? And that could happen, okay? It looks like it might even be setting up now. So you just got to kind of wait, and then wait, in a 1 minute time frame, you might have to wait, half an hour for the thing to reset, okay? Oh, my pleasure. Thank you. Ooh, all the way from India. Wow. Cool. My pleasure. Now, Terry's right, because if this goes down even further, we could get a yellow PTF like right in about another 30 seconds or a minute or so. So if that's the case, then we've got yellow across the board. Here we go, okay? And if the momentum is not strong enough to keep this red, then that kind of changes things, right? And it's kind of a messy market. We may have a bottom in here, all right? So maybe this thing will reach down and maybe give us an opportunity to go long next time. But you'll see this thing turn yellow after this price bar completes. And I say that because the PTF waits until the end of the price bar. Nope, it's still red. Amazing. So the close was still below. All right, still moving down. Now, another thing is if you were already short on this and, you got in, way up here based on this, and now you got a red here too. Wait until these turn yellow and then scale out. Because usually you get a pretty significant rebound after that. So hopefully you can see that's red now over here. All right, so the other thing too, notice you got bullish divergence building in here. So that makes the case for a rebound. Another possible trade is if this thing gets even deeper, then the distance from where it ends to the retracement target zone will increase. And therefore the risk to reward becomes possible for a counter trend wave 4 trade. That could be a possibility, but you couldn't do that until this turns green, this goes yellow, this goes green. And by the time you get in, you'll probably be too closer for any type of rebound trade. Sometimes you can get in, but sometimes you can't. So the better trade here is to wait and see if those PTFs remain red, at least on one of the time frames, before you get the rebound. All right, so now you just got another pyramid here on the 60. So now you can move your stop down to here. So you'd be in good shape on this trade. Now, a couple of things you could do to manage the trade. All right, we got red. We got to stop pretty close. You could make this a scale out stop. In other words, if you got a rebound from here, this will remain red, right? So you could scale out part of your contracts here, keep the rest in, and then leave the next time it makes another low. So there's lots of different configurations and ways in which you can manage the trade based on what the signals are telling you. And how you do this here can be done exactly the same way on any time frame. I do tend to be a little more aggressive in scaling out when I day trade, because when I day trade a very short time frame like this, think about all the time frames above me that could change the trade. So I tend to get very aggressive in scaling out, much more so than on a long-term trade, because usually the trades under me on a long-term trade are not going to affect my trade stop, because my stop is so much further away. But on a short-term time frame, your stops are close. So if you have a large order come in on one of the larger time frames, it can affect it. So I tend to be more aggressive. And the more aggressive you are with scaling out, the more your payoff ratio is going to come down, but your win percentages should go up. So your actual P&L should be similar. Now, if you scale out a lot, but your win ratio doesn't increase, then you're going to then you need to fix that. All right, so we're probably, I mean, according to this bullish divergence here, it could go down one more low, but we're getting closer and closer to a bottom here, I think. All right, so we got another little low here. Okay, that's going to change the PTFs now. So the one on the 60 turned yellow. This one is still red, but probably could turn yellow at the end of this price bar if we don't see significant selling. So that means it probably at that point will move up. Now, when we day trade and we show up like this, and the same thing, whatever time frame, let's say you trade 2 hours a day or something, or 3 hours, you tend to use the PTFs a lot, because a lot of the big trends you kind of usually have to be there all day to catch some of the bigger trends. So when you're scalping the market using the PTF in a shorter bracket of time you've allocated to do this, you tend to rely on PTF trades a lot. Now, when a PTF goes yellow, it can go back to another solid color again. That's always possible. In other words, it could go yellow briefly, and then more selling comes in that turns it back to red. All right, that can always happen. In fact, you saw it happen on the 60-minute chart over here. So it was red, all right, bottoming, and then more selling came in. Now it's yellow again. Now we have yellow here. See, this just turned yellow here. So if I had a lot of contracts on the table, I would probably be taking some off here. All right, so the next question, now that we have no longer any PTFs to help us, is this setting up for a long-term move to the upside now? Is the selling done? Really hard to say here. Okay, so I would not be taking a long trade now. Very, very red owl here. And I have no idea where a proper target would be based on the 1 minute. So this needs to reveal itself more before I would consider a trade. So probably, you know, take another half an hour before something potential showed up, because I don't want to get stuck in this mishmash going back and forth without getting in a trade with some probabilities based on the indicators. And so those now are gone. Okay, so we have basically a neutral situation. So let's take a look at another market. Okay, so now we have a situation here on crude oil. Let me remove these drawing tools, where you have a red PTF on the 15-second and a green one now on the 1 minute, and a green pyramid to the upside on the 5 minute. So I actually would look for a long trade here, but I couldn't take it until this and this go green and yellow. All right, this would have to go green too here. Now it's very close to going red. So at this particular point, we got to wait and see. I would not take the trade at all, but I would wait and see what happens here if we see some more bullishness come in. Again, I can't go long with a red PTF on the short time frame. And we could pull down a little bit more before a long trade reveals itself. Okay, so nothing here yet, right? Let's go to gold. All right. So gold at least now is looking a little more orderly. My only thing with gold here is after 9 o'clock, the liquidity starts to dry up a little bit on these time frames. So we have no PTF, but we do have kind of a clarity here. So that's a 3, maybe of some degree 4. So maybe a long trade for 5 could be setting up. Again, we just kissed the target range, but this is still red. This is still red. So we'd have to kind of wait for those to roll over. Then we have to see what the risk to reward is. And then, you know, we did a trade, for example, yesterday. I think it was the MES, where we didn't want to miss the wave 5. So we went in, put our stop under here, got stopped out. But then it rebounded here. We went long, and then that you know, bailed us out. So sometimes you'll go long and your bottom, you know, is just about enough to make the trade worthwhile in terms of hitting the fib retracement area, but you'd like it to go deeper in the retracement area, but you don't always get that opportunity. So you don't want to miss the trade. So you take it with the realization that if you get stopped out, you may have to do it again. All right, so don't throw the towel in. If your analysis is spot on, but you just missed one of the bottoms, stay with the trade. In terms of trying it again. All right, so a lot of red on the PTFs here. Again, okay, we'll see what happens. Owl just went green on the 15-second, but we still have red here. Now, out of curiosity here, we drew in a fib extension. Let's say we say this is a low, then that would be our target, 1687. So by the time this turns green, we have to see where prices are and where a stop could be, which ideally would be here. You may not have a risk to reward that's worth it. So you may be forced to wait. And if it goes back into the target zone, then you may get the opportunity to go long. So it's very structured. Okay, we're never just pulling the trigger for the sake of pulling the trigger. You kind of want to make it very, very structured. All right, let's visit MES again and see how that's making more lows. Check that out. All right, so that's going down again. Now we got, see, now this thing went red again. Okay, here we go. Once again, really heading down now. So the market is down 96 points, but you know, when you have a movement of 20 or 30 points on the Dow, or it can actually move the MES quite a bit. All right, so there you have that. All right, so now we got to wait it out. Again, if you got in early, good. If not, okay, here's the M&Q. Now, just because you're getting pyramids here doesn't mean you're going to go short, because you don't know what the target zone is going to be. You know, where is it going? If I don't have a clear picture on where it's going, I stand aside. So I kind of am pretty strict about connecting the dots and making sure I know what my target zone is, so I can calculate my risk to reward. Yeah, it's going lower. We got red here, red here. These PTFs are not helping us for a target because it's so close to the price. So, if anything, when I look at this longer term time frame, all right, this is a small pullback to the downside in this possible movement up. So I might be better off waiting for a bullish trade after this sell-off completes, considering I missed the greatest point to get in back up in here. I mean, if you got in up here, this was a home run. Otherwise, showing up after the fact, you got to wait it out. It's great stuff, though. But, you know, on a 1 minute time frame, you don't, you know, a big wait is maybe 20 minutes, 30 minutes. So it's not like it's a super long term. It's a lot of fun. But anyway, that gives you a snapshot of the kind of thinking that goes into how I analyze markets based on the trading tools, so to speak. And it's a combination of knowing what the target is before going in, having the indicators give me the probabilities, the edge, and then risk control. And not only trade size, but also risk to reward for the target. All right. All right, so I guess we're coming up over an hour here. I guess we'll call it quits, and we'll see everybody back next week. Just going to go to gold real quick. Gold's coming down to that target again. So this is good. Let it go into the target, and then we'll redraw the fibs. And this could be a long trade. So I kind of almost like this particular setup best of all right now because of the clarity of the Elliott wave and clear target. This is the target after this is reached. So it's still reaching down. All right, so we'll see you back here next week. Thanks so much for showing up. And as far as winners today, I kind of think on the stock situation, I didn't see any that knocked my socks off. I have McDonald's I liked, but I liked that one last week as well. So that's kind of, you know, might be a little bit late at this point, but there you have it. All right, so not every week we can find them, and that's kind of telling in itself. All right, so we'll see you next week, and thanks for tuning in.